All right, let's see what we have here. Continuing our discussion of managerial accounting, looks like we are being tasked with calculating some costs. So let's see what we have here. Right here it says Wooten and McMahon Enterprises produces a product with the following per unit costs, and there we have them: direct materials, direct labor, and manufacturing overhead. Last year, Wooten and McMahon produced and sold 825 units at a price of $74.80 each. Total selling and administrative expense combined was $24,200. What was their per unit prime cost? Okay. So, looks like we have another question down here that's related to the same scenario, but we really don't have to do much. You know, I don't have my calculator open, which is just about normal for me. But we don't have to do much here. What was the per unit prime cost? So the first thing that we need to do is we need to figure out what our prime costs are. And so we want to know, is direct materials prime? It is. Is direct labor a prime cost? Yes. Is manufacturing and overhead, is that a prime cost? No, this is a conversion cost. So we only have to consider these two figures here, and to answer this question, all we have to do is take $13 and add $8.80, and voila, we have the correct answer. 2180, because look what they asked us. They just want to know what was the per unit prime cost. They didn't ask us what the total prime cost was. If they'd have asked us that, we would have needed to multiply by 825, but they didn't ask us that. So we're done. However, when we get down here, they want to know a little bit more. They want to know what was total operating income. Okay, well, this is a little bit more involved. So, operating income. Where do we find operating income? That's going to be on the income statement. Surprise, surprise. All right. So, if we're talking about the income statement, well, what is the first thing to calculate on the income statement? We need to calculate revenue, and for us, revenue is going to be 825 units, because they produced 825 and they sold 825. So we want to take 825 units times the sales price of $74.80. And, if we do that, 825 units times $74.80 equals 61,710. 61,710. That's going to be our total amount of revenue. All right, so then, the very next item on an income statement for a manufacturer or for a merchandiser for that matter, and we clearly have a manufacturer here because we've got manufacturing overhead, is going to be cost of goods sold. And what constitute cost of goods sold for a manufacturer? Well, it is the total of direct materials, direct materials, direct labor, and manufacturing overhead in finished goods. And if they sold 825 units, we can assume that they were in fact finished goods. We don't sell them when they're part of the way done. So we have two of our numbers right here already. So I'm just going to start there, 2180. Then I'm going to go up here and grab this manufacturing overhead and add that to it. So our total product cost per unit is $38.30. Okay. So I'm going to abbreviate. This stands for cost of goods sold. And that is going to be 825, the same units, times $38.30. So times 825, since we already had the 3830 there, is going to give us $31,597.50. 31,597.50. We're being really, really precise here. And then we also, so actually what we're going to do at this point, I'm going to kind of jump ahead here, and we're going to have, now whenever we were in accounting 1, we had this thing called gross profit, and gross profit is simply revenue minus cost of goods sold, but we're going to call it a little bit different, call it by something a little bit different in a manufacturing environment. We're going to call this gross margin. We don't really have to do this to figure out the answer. 61,710 in revenue minus 31,597.50. So our gross margin is $30,112.50. And then we've got selling and administrative expenses here. Of 24,200. So this is where I did the subtraction. 61,710 minus 31,597.50 gave us a gross margin of $30,112.50. Then we also have selling administrative expenses of 24,200. That's directly from the question, so I'm just going to subtract that out. So we have total operating income, which is the question. What is it? $5,912.50. That is the answer. Okay, next question says, if I can get to B still and cooperate a little bit. Synergy Inc. manufactured 6,000 units during the month of March. They incurred direct materials cost of $120,000 and manufacturing overhead costs of $48,000. If their prime unit cost was $31.20 per unit, how much direct labor cost did it incur during the month? Okay, so they're asking basically us to do a little bit of 6th or 7th grade algebra is all this amounts to. But we have to know the formula here. We're going to have to know what our prime costs are. Now we had a question about this already, and we said that prime costs are made up of direct materials and direct labor. Okay? Well, they've given us direct materials right here is 120,000. They've also given us the number of units produced, and they've given us the total prime cost per unit of $31.20. So all we have to do here is we're going to take this $31.20 and we're going to multiply it by the number of units that were produced. Now this is not going to give us our answer, but if we do that, 6,000, I'm doing this backwards, times 31.20 equals $187,200, and this is total prime cost. Okay, that's total. But what I want you to understand is that embedded in this $187,200 is this $120,000. So they want to know direct labor cost for the month of March. So to figure that out, we have to take out direct materials, which is a prime cost, and that's going to give us $67,200. Direct labor cost incurred, $120,000 in materials, prime cost $67,200 in direct labor prime cost. One more question and we'll close this video out. It says Taylor and Edwards manufactures TVs. Last month, direct materials, which are electronic components, costing $550,000 were put into production. Direct labor of $880,000 was incurred. Manufacturing overhead equaled $495,000, and selling and administrative costs totaled $396,000. The company manufactured 8,400 TVs during the month. Assume that there were no beginning or ending work in process balances. Okay, so that simplifies things a little bit. What was the per unit conversion cost? So very, very, very basic. We just have to know what conversion costs are. And if we recall, conversion costs, let's see here, conversion costs are direct labor, and if you'll recall, direct labor is also a prime cost, and manufacturing overhead. So direct labor, if you can read my writing, and manufacturing overhead. So all we have to do, they've done most of the work for us. We can ignore direct materials of $550,000 because that's a prime cost only. We can also ignore selling and administrative costs of $396,000. We do not need figures. However, we cannot ignore direct labor of $880,000, which is a conversion cost. So we're going to need that one. Put a little check mark by that. And we're going to need manufacturing overhead of $495,000. And if we were to add these two together, 880, another 0, plus 495 and 3 zeros, equals $1,375,000. I'm then going to divide by the number of units produced, which is 8,400, giving me my answer, conversion cost per unit conversion cost is $167,200. $163.69 following the instructions. There it is. Whoops. Let me move that up for you a little bit so you can see that. I apologize. 880,000 plus 495 was the 1.375 million divided by 8,400 gave us 163.69, and then I just moved this over here. Per unit conversion cost equals $163.69. We can also see that up here on the calculator. Okay, that's it for this video.